How's it going out there? It's Tuesday, April 12th. I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break down the headlines and tell you what's really moving these markets. Last night, and usually the night before, I start writing up my monologue. Just a couple of bullet points, and I kind of freestyle it. But I started saying that if you're a trader, it's probably a great time to buy stocks right now, since most technical indicators are showing severely oversold conditions. Severely oversold conditions. Like conditions that you normally don't see. And almost, across the board on all these metrics that I track. I mean, it's just, you could be in a bear market and it just gets overly bearish and everything is so bearish that, you're going to have a quick turnaround. And sure enough, we get a CPI reading this morning showing inflation, the highest since 81. However, the core CPI, which excludes food and energy, which, they exclude that because that's the most volatile piece, even though that's our highest cost almost in the whole freaking index. But, let's exclude that because it doesn't matter, right? Let's just exclude it. It's more easy for us to track. But that came in a little bit lighter than expected, probably due to a decline in energy prices. And by decline in energy prices, we're looking at 130 to what? 100, 105, whatever it is, right? I mean, we talk about last month's data when it was tracked. And you're looking at a lot of media outlets, and we've seen a rally in stocks, right? We see the NASDAQ especially, growth stock. A lot of media outlets are saying this is great news because it looks like we're topping out here on inflation. It's peaking. And you see the word hope. Really, if you look at all the headlines, hoping that we finally topped out because inflation's still going higher and higher. Remember the days when we had Powell come on? Right, say, hey, you know what? It's transitory. That was a year ago. For 12 months before November, he was saying that inflation was transitory. That's how much inflation was rising over that time period. And this just didn't happen. It's explosion over the past couple of months. We've been seeing this rise for a year and a half now. And the Fed just happened to say, hey, you know what? It might not be transitory in November. And now, from it might not be transitory to holy shit, we're really behind the curve. And now you're seeing rates explode. 2.8 on a 10-year. Are you kidding me? 2.8 on a 10-year. Mortgage rates, 5.25%. You can say, well, highest since 2011. The older generation probably like, forget it. We saw 13, 14% mortgage rates. You're not used to seeing rates rise this much, this quickly. And we're talking about 5 months ago, they were 3%. We're talking about 40 days ago, they were 3.25%. Now you're looking at 5.25%. Holy cow. I mean, that's an incredible move, especially since the Fed funds rate is just 0.25%. Because they decided to only raise by 0.25%, which immediately, like the next day immediately, they were like, all the Fed governors came out and said, holy shit, we got to go a lot faster. Again, trying to sugarcoat this in hopes that inflation is going to come down, and it hasn't. But now CPI, the core CPI, which really doesn't matter to anyone unless you don't use energy or eat, which I think is nobody. That's showing that inflation is kind of moderating, which, look, I hope the people predicting this are right, but I'm not buying it. You know why? Because those numbers, they do not account for the recent lockdowns in China, which are absolutely insane, by the way. And shout out to those 2 or 3 reporters on CNN that are in China and showing what's actually taking place in Shanghai, where they're forcing 25 million people. 25 million people live in Shanghai. How many? I think it's 8 million. It was 9 million, 9 million in New York City. I mean, it's probably a lot less than that because everyone's moving out of New York City these days. But 25 million people just in Shanghai alone, forcing them to be locked down, to stay in their homes. And you should see some of those videos. And it's so good. Even the conservative sites who are talking about this are showing those videos every place. So very, very good reporting there. Good job by those people who, I don't know if their lives are threatened, but they could definitely go to jail. But when you see drones making sure people off the streets, they're showing Shanghai exactly how it was in January, February, March, when they started closing everything down. There's nobody on the streets, except this just came with no warning. They just started taping up doors, and people were away from their families. They can't get back to their families. Some of these people have no access to food. They don't know what to do. Imagine being separated from your kids and you can't do anything about it. And that's why all these people bitching about America all the time. America sucks and equal rights. Unless you go to China. Go to fucking China and see how they're dealing with things. Which, by the way, our politicians will never talk bad about China. Because we're all in China's pocket, right? So we'll never talk bad about that. Forget about it. Forget about that. Xi's changed the laws where he's going to be running that country forever, right? No more term limits. Forget genocide. Forget stealing technology. Forget all that crap. We don't say anything bad about China. No way. No way we're not allowed to. No, we're not allowed to. But when you see these videos, you're going to be like, holy shit. Seriously, take a look at them. Take a look at them online. Again, great reporting by those people who are putting out lives. I mean, I wish news outlets were really like that. Wouldn't it be cool if CNN was really like that, reporting the news instead of bullshit stories on both ends, on these super conservative sites and super liberal sites, with all the bullshit, but everybody complaining about America. America sucks. How about living in the Ukraine right now? How about living in Russia right now? How about living almost anywhere in Europe right now? How much are you paying for energy prices and slower growth? You don't like America, get the fuck out. Leave. Just get out of here. There's nothing stopping you. You can leave. Just goodbye. Go. What a bitch about how terrible it is here. Give me a break. And they got videos of people screaming in apartments, and it's like these massive, like an apartment project, like 4, 5, 6, looks like 40-story rising apartments. And as they're locking down at night, you just hear people screaming and yelling. They don't know what's going on. I mean, holy shit, imagine that happened here. I remember in January 2020, when an employee that just left us to go take a teaching job in China. She's awesome. Love her. I wish she stayed. But she went there right before COVID, and she was on lockdown. And she sent an email, and I'm like, wow, what's going on over there? Because everything I'm hearing, and this is in January before everyone was really talking about it here. I'm like, holy shit. I mean, it sounds pretty crazy. She has no idea. She's like, give me a call. And I spoke to her. The shit she told me, being locked in a room, she can't leave, barely had access to food. She had like a little menu that was very limited that she could order from, and then they knock on the door and just drop it off right outside the door, which she had to take it. She couldn't wash her clothes. She was locked down for 14 days. Just took her through her someplace and locked her down for 14 days. How crazy is that? I mean, that interview led me to really start researching COVID, knowing that it was coming to the U.S., interviewing people on lockdown in Italy. But China, holy cow. I mean, you forget how it's a dictatorship, how dangerous she is. I mean, increasing those limits so you could basically have power forever. I mean, that's our biggest enemy, not Russia. I mean, the technology, the genocide. I mean, how many people did they kill with COVID? They didn't let anyone in to help them. Wuhan, they're still denying about Wuhan. I mean, seriously, tens of millions of people died. And he still won't admit that it was fabricated in a lab in Wuhan. We all know that now. Again, our politicians continue to support China. Our media outlets rarely have a bad thing to say about them. It's crazy. Anyway, these lockdowns are very, very serious. And the reason why I called for a special briefing, and that was in February. I rarely do this. I called for a special briefing, and this was the second week in February, after doing all my research, everything on China, and said, holy shit. Because China's a growth engine of the world, and they're closing everything, and we're trading at this expensive valuation like everything's going to be okay, and COVID's about to hit here. And we sold out a lot of positions in the newsletter. I wish I sold them all, but we sold out a lot of them, and then we were able to get back into the market a couple months later and did very, very well during that period. Doing the research. Going back, that was back in February, January. Now look at today. If you're looking at these lockdowns, they come at a time where inflation is surging in China. And this is based on the recent CPI and PPI numbers released earlier this week. Now, why is that such a big deal? Because we're talking about our CPI. And our markets are going higher, saying, oh, okay, well, inflation moderated. This could be it. This could be peaking right now, summer peaking. That's what they're saying. Not so fast. China is a nation that the world is counting on for growth right now. Okay, they're one of the largest exporters, and their government announced it's going to implement easy money policies to help spur growth, which nobody could do right now because inflation's out of control. China didn't really have that problem. They saw inflation. It was a lot higher. It's not at record highs. It was a lot higher 3-4 months ago. And they're like, hey, we're going to implement these easy policies. This way we could stimulate growth, which is great for the entire world. That's what we're depending on. Now we got high inflation. Super high inflation in China. So how do you stimulate an economy when inflation is running wild? You can't. You have to do the opposite. You have to shrink your balance sheet, aggressively raise rates, something our Fed is finally starting to get after 18 months, 24 months of really rising inflation. Remember when they said that 2%? 2% was that rate where if it goes above 2%, we're going to start raising rates. We're at 8%. We're over 8%. And we raise how many times? 0.25%. Crazy. We should be at 3.5% on the Fed funds rate right now. That's how crazy things are going to get. I don't know if that's factored into stocks right now. So you're seeing them pull back a ton, and yes, you're going to rebound. That's what happens. Like a road, it stretches and it comes, but that's what you're going to see. But the trend is still lower, lower, lower. So strong growth that everyone's expecting out of China, those easy money policies, kind of off the table, which is not good. And then you throw in the recent lockdowns, which, by the way, I'm not sure if you saw the data yet. Yeah, I like throwing out data, even though people will sometimes disagree, especially during COVID. I get so many emails. You're crazy. You know what you're talking about. Whatever. Okay. Whatever. Okay, the data's wrong. Well, you should follow the CDC. This is data from the CDC. Well, just if you have an agenda, don't fucking email me. But if you want to learn and know the data so you can make money off of it, this is what you do. You got to look at the numbers. But according to the data, China is seeing 20,000, a little more than 20,000 new cases for the entire country. Most of those, I think it's 13,000 of those cases, are in Shanghai. So 20,000 new cases per day out of a population of 1.4 billion. And they're going full-blown lockdown. Being monitored by drones, really being enforced. No COVID policy, very, very strict. So to put that in perspective, there's 330 million people here in the U.S.? As of yesterday, we're seeing 30,000 cases per day. 30,000 cases per day. Okay, they're seeing 20,000. We're not on lockdown. Yes, we have mass mandates now in Philadelphia and other places, which is insane, right? We know the data. We know a lot of that stuff doesn't work. We also know that lockdowns are one of the most terrible ideas we ever had as a country because COVID is only super, super dangerous for a small group of people, which we identify within the first 3-4 months. First 3-4 months of pandemic, we knew. Because that's when the data started coming out. But it's crazy that China is locking down their entire country based on an infection rate, not a death rate, an infection rate of 0.0014%. There's probably a greater chance of you getting eaten by an alligator than dying from new strand of COVID in China. And they're closing their entire economy, taping their doors, forcing people inside. You can't see your children. Wherever you are, you're locked in too bad. Don't have access to food, starve. I mean, they show in videos, again, those people from seeing a great job of how, they're taking people out of the apartments and they're killing their pets. There's video footage of this. I mean, it's crazy. I think that would be the final. You could do anything you can. You could have genocide. You could steal our technology. You could do anything. If you mess with our pets in the U.S., forget it. It's over. It's over. I mean, they don't even have to do anything for the environment. Environmentalists don't even care about China, right? They have coal. They don't even care. Pets, that's where everyone draws the line. That's where people get super crazy, which is kind of funny, right? It doesn't matter. Genocide, you're good. You killed all those people, fine. You steal all our technology, you're good. Don't worry about it. Okay, what the fuck? You killed all of our pets? Holy cow. Now you're going to see everyone come out against China. But this is what's going on there. Pretty crazy, right? When you look at the numbers at that full lockdown. Now, regardless of how other countries deal with COVID, and if you hate it, if you like it, whatever, you have to look at the facts. China's on lockdown again. This means more supply disruptions in almost everything. Cars, food, chips, textiles, bedding, lighting, plastics, electrical machinery, one of China's largest exports. That includes mobile phones. And the data I get that tracks this stuff on a weekly basis is showing that ports are becoming extremely congested again and supply chains are being disrupted again. What does that mean? It means that there's going to be less goods coming here. It's going to take longer to get stuff. And to account for that, what do businesses have to do? They have to raise prices. So if you think that we've topped out, again, hoping, because if you believe inflation is peaked just because of the CPI data we got this morning, the core CPI data we got this morning. I hope you're right. I really do. The data doesn't suggest that. So you're going to see more supply disruptions. And China, the world's growth engine, when she's about to implement easy monetary policies, well, that's probably not going to happen in the short term as they're seeing much higher inflation than expected. And you know what? That doesn't bode well for the U.S. or especially Europe. We're dealing with an energy crisis, a huge energy, far worse than ours. Well, with slowing growth, they're dependent on Russia for energy, and they're trying to say, well, they're trying to fight Russia. they're trying to like put these sanctions on Russia. They're trying to talk tough with Russia. Russia shuts off energy. They're done. What are they going to do? I mean, Italy's like scrapping. They're trying to sign deals, I think, with Algeria or something like that. I mean, I don't know if you know what's going on in Europe right now, but it's insane. It's insane. It's to the point where they better be careful what they say to Putin. Because India's like, hey, I'll buy everything you got at cheaper prices. I mean, we have a poor economy. You want to sell us oil cheaper, we'll buy everything. I mean, we don't give a shit if people get pissed, right? Because India's like, who knows whose side India's on? Nobody knows. India, it's weird, right? We know where every country stands, pretty much except for India. Do they like, well, we don't like Russia. We're going to buy all this shit because we need it. But really, nobody knows. And, it's not like we get anything from India, so it's kind of like, nobody bothers with them. They can do whatever they want. But it's just weird because isn't it more populated than China or second, wherever it is? I don't know if it's, but it's weird that, they're going to buy shit, even though you don't know what side they're on or whatever, because you have to pick sides in times like this. But it doesn't bode well for the U.S. Doesn't bode well for Europe, most of the developed countries. It's getting worse. You're going to see inflation continue to move higher, which means if you're looking to buy stocks on this rally, I'd be more of lightening up my positions. I think that's better. Because we always buy the dip because you had the Fed, the punch bowl, they're going to bail out everybody, everything's okay, that's fine, everything's going high, everything's getting funded, more money into the system, throwing money everywhere. Those days are over. You don't have the punch bowl anymore. So it's more like a sell the rip environment. And that's probably what you're going to see here. Maybe a couple days of the market going higher and good headlines, and then next week we'll get back to inflation numbers, and we're getting some more inflation data towards the end of the week. But more importantly, we have a lot of negatives with war and inflation and everything, but we're heading into Q1 earnings season. And that happens this week. And then we have it pretty much through mid-May, and that's when most of the companies are going to report. Most of the companies. So in 2 weeks, I think you have something like 45% of the S&P 500 companies are going to report in that 1 week. So it's pretty much 2 weeks from now. That week period is, I think it's almost half the S&P 500. Okay, Q1 earnings season. And I'm not sure if you know this, because I track earnings. I love earnings season. Daniel and I are going to come on tomorrow, probably talk about earnings season and what to look for and analyst estimates. I always tell you to look at the FactSet. Just put FactSet PDF earnings in Google, and sometimes it's a week or two old. Maybe you get lucky and it's a day old, depending on when you're looking at it. But it's like a 25-page report of everything about earnings. Its sector analysis is great. I mean, they should be charging like hundreds of dollars for that report every time they publish it. And it's for free. You can get it for free. But take a look at that report. Because what you're going to know is consensus estimates for this quarter, Q1 2022. This quarter, with everything going around, supply chain disruptions, inflation, earnings estimates have been revised 2% higher year to date. You would think they would be coming down, right? I mean, does that make sense to come down with all the risks going on? Analysts have revised them higher, right? High, 2% higher. So expectations are super, super, super optimistic heading into earnings season. And stocks aren't cheap. And we trade at 20 times forward earnings. And 20 times forward earnings alone, if you want to do analysis, and I'll teach you something. Hopefully I'll teach you something of what I learned. But at 20 times earnings, it's higher than the 10-year average of 16 times earnings. But you just can't take that earnings rate, that 20 times forward earnings alone. You have to look at rates. And when rates are low, 20 times earnings, 23, 24 times earnings is not that expensive when you have rates super low. Rates aren't super low anymore. 20 times earnings is very, very expensive. Even though we've seen a lot of the market get hit, we're still expensive, with rates going to rise aggressively, with the Fed shrinking its balance sheet. We're heading into earnings season where analysts are more optimistic than they've ever been. I have no idea why. And a lot of that could account for energy, which accounted for a lot of that move. Because you look at the S&P as a whole and that energy component, you're seeing earnings explode because, look where energy prices were compared to last year, which maybe they were $40, $50, I don't even know, a year ago. More than doubled. Crazy. So heading into earnings, it doesn't look good. There's a lot of risks out there, guys. And that one catalyst you could point to, which was China easing, largest exporter, just see strong growth out of there. Now they can't ease. Inflation's out of control. You're taking away that was the biggest catalyst right now. Now it makes things scary. So if you're a Curzio Research Advisory subscriber, I think most of you are, since that's my flagship product and also one of our cheapest. It's under $100 for an annual subscription. I'm holding a special briefing tomorrow. So it's going to be available to everyone around 5 p.m. If you're invested in equities, bonds, gold, crypto, whatever, it's a must listen to. Because the research I'm going to share with you, you're not going to see it out of other publishers. You're not really going to see it in the media. It's detailed. It covers almost every single sector. And it's really fucking scary. I'm sorry to use that term. But I can't describe it any better than that. Over the past 2 weeks, the data that I tracked, the data that I've seen, okay, we've seen a monumental shift of what's going on. A monumental shift. Which reminds me of mid-2007. When the foundation started to show cracks and nobody really paid attention. The foundation wasn't showing cracks. We had lots of positives out there. You want a job, you can get one. Earnings are moving higher. Companies have pricing power for now. You've seen those margins go higher. That's why you see earnings estimates being adjusted a little bit higher. However, you can't raise prices forever. And the data I'm going to show and share with you is showing the crack in that foundation, where it's leading to less demand in some of key sectors. And you need to pay attention because you have to allocate your portfolio a certain way in this environment. You can't just buy and hold long term because some of the sectors out there could get hit by 10, 20%. Not every sector. There's a lot of good stuff out there. Told you about cryptos, and metaverse is seeing a massive amount of funding over the past 3 months, that more than any other sector. Hundreds of millions of dollars pouring into the metaverse. And I've read headlines of people, trying to kill it and say it's so early. They said, listen, follow the money. Okay, that's what you do. You don't even have to follow the analysts like Morgan Stanley, Goldman Sachs, Citigroup. All of them came out in the past 3.5, 4 months. All of them with huge reports. Anyway, from 25 pages to 181 pages. I know because I read them all. It's an industry that we're in. And then crypto. And they're predicting that this is going to be an $8 trillion to $13 trillion market. These are forecasts. You can take them with a grain of salt. However, and to put that in perspective, I think the mobile phone market is expected to hit, I think in sales, 1.4, 1.5 trillion in a couple of years. And you're looking at 8 trillion. The cancer market is about 250 billion, I believe. I mean, you're covering sectors that even AI is not $1 trillion sector yet. And they're saying that this is going to be an $8 trillion to $13 trillion opportunity. Again, those are forecasts. But when you see the hundreds of millions of dollars from the Winklevoss twins, from billionaires, from Galaxy Digital, when you're seeing so many of these metaverse projects, hundreds of millions of dollars, Anderson Horowitz, some venture capitalists in the industry funding these places, that's what you pay attention to. Because if these guys are getting in, these guys are pushing into that sector, something is going on and something big is going on. And it is exciting. It's a sector we research a lot. That's a great area to be in. Gold, commodities we talked about, but I'm going to cover a lot of this in our briefing because you need to be positioned over the next 6 to 12 months. And not only am I going to show you how to allocate your portfolio, I'm going to show you how to make money from the sectors that I expect to get crushed. So it's not just you're out of those sectors, how to make money off of them. Because when you're making money as the market crashes, it's much, much better than just being on the sidelines. Because if you're on the sidelines, you're in cash and you have inflation and you're losing money that way. So there's some sectors that are working. You're not going to see. That's why you're seeing it feels like the market's down much more than 6%, 7%. The S&P 500 because SPACs are down 70%. A lot of growth stocks are down 30, 40%. It feels like that. It feels like the market's down a lot more, and I get it. But you're going to see even some of the safe sectors start getting hit based on the data I'm going to show you. So pay close attention. It's an important briefing. I don't do this often. I don't have briefings every week or every month. And the last time I did this was mid-February 2020, telling everyone to get out of the market just before a crash. And you can go back to listen to that podcast. Please do so. Something I'm very proud of. Because that podcast, we were supposed to have a guest. I said, you know what? There's not one guest on here that's going to tell you, or it's going to help you out more than what I'm going to tell you right now. So there's no guest this week. So I was doing one podcast a week on Wednesday. And I went over everything on China, why the market's going to crash, why it's imminent, and why you need to protect yourself. Same here. You need to protect yourself in this market. There's a lot of risks going on. Again, the data I'm going to share in this briefing are things that you're not seeing in other places, and it's enough to scare me, and I don't get scared off when it comes to the market. I usually see these as buying opportunities. But based on what I'm seeing, where companies are losing that pricing power, so not only are you trying to ramp up demand, say the EV market, you're trying to ramp up demand because you're seeing all this demand for people who put down $100 for your EV that was supposed to come out a year ago. It's not coming out for 2 years from now. Now you're ramping up all that demand, but now you're seeing, or you're ramping up all that supply, but you're seeing demand come down. A lot of these people are going to start canceling their orders and say, you know what? I can't afford this. I'm not going to buy. And you're seeing that right now, which is going to create massive inventory concerns as some of these companies are going to get super aggressive because demand is so high and they can't get that supply and get their goods. But now you're seeing demand fall, and those supplies are expected to get delivered. That's a massive problem. In the middle of interest rates absolutely skyrocketing. And the Fed just sitting there hoping. The Fed is hoping and praying that things go its way because, I mean, right now I can see Powell like under his covers going, holy shit, what do I do? Because I don't know what he's going to do. He doesn't know what he's going to do. And even all the Fed governors don't know what he's going to do. That's why they all came out after the 0.25% raise and said, it's got to be 50 next time and then another 50. And based on where the 10-year is, based on where rates are right now, we should be over 3% of the Fed funds rate. That's how much we need to raise. So again, everyone that's looking at the CPI data, I hope and pray that you're right. I just don't think so because it's not accounting for anything that's going on in China because that's just happened, lockdowns. And that's going to show up next month, the month after that. And that's when you're going to have to worry because you're going to see inflation. Hey, it's not moderating. Maybe it takes a couple more months. Hopefully, only a couple more months. But it's definitely didn't hit a top this month. There's no way. You can't tell me those lockdowns in China are not going to impact that number over the next month or two. Let's see how long China keeps those lockdown in places for a strand of COVID that is barely a cold. You're not. I think Philadelphia is implementing mask wearing. You have to wear mandatory masks. You know how many people died over the past week from COVID? 2. I mean, I don't know how many people are in that city. What? 2 million? 3? I don't know. Around there, 2 million? You're locking down, just mask mandates, not so much lockdowns, but mass mandates, and 2 people died. I mean, I could name how many diseases over the past week that more than 2 people died. But that's politics. That's what we're doing right now. In China, the whole country is on lockdown. And I don't know how long it's going to be, but it's definitely going to impact our markets, impact the world markets, and we haven't seen that yet. And it's definitely going to impact inflation. Let's see how it plays out. Again, if you're a subscriber, you'll get that briefing around 5 p.m. That's 5 p.m. tomorrow. Which will be part of the April issue for Curzio Research Advisory. Definitely give a listen. And if you're interested in subscribing to that newsletter, give me a shout. Again, it's a newsletter we offer at a very, very cheap price. It's under $100 for the entire year. If you're interested, send me an email, frankcurzioresearch.com. If not, no worries. But if you are a subscriber, please, if you own equities, which you do if you're probably a subscriber, give it a listen because I'm going to share data that you're not seeing anyplace else. And the data is really, really scary. So, guys, that's it for me. Hate to end like that because I'm an optimist. I don't want to sound so negative. But listen, I tell how it is. Okay, that's why you listen to this podcast. It's not fluff. I'm not going to be the cheerleader and, oh, it's okay, and the market's doing great. I'm going to tell you exactly what I'm seeing, the data I'm seeing. I've been doing this for 30 years. What I have access right now to is the reason why you're able to get in and out of markets and be able to predict a lot of great things over the past 10, 15 years. It's because of the data. It's because of the network. Okay, so definitely give a listen because this is data you're not really going to see anyplace else. I haven't seen anyplace else, and it shows that the cracks, this foundation is definitely cracking. So, guys, that's it for me. Questions, comments, for the email, frankcurzioresearch.com. That's frank@curzioresearch.com. Enjoy the day. I'll see you guys tomorrow. Take care.